Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders. We got Blane Markham here from the Hughes Trading Team, and it's clearly Black T-shirt day today, Blane. So we look great in our black T-shirts, but for those of you at home, we didn't plan this. This was just a coincidence. But oh wow! So this is a cool session to have here. Kind of a different week last week. A lot going on. Short week, day, obviously on 4th of July, markets are closed, half day on Thursday. That was a lot of time for things to happen. And it looks like a lot has happened. So very anxious to have you here and have you kind of jump into your broad market overview and tell us what you're looking at and what's going on. And we also want to follow up on some of the things we've been talking about because I know, man, there's something you were really excited about that has come to fruition, and I want to hear all that excitement come out of you and tell us all about it. So jump
Yeah,
in.
absolutely, John. And real quick, I'll just add that typically, when talking about the stock market, Black and Monday typically don't, relate too well together. But we'll try and
Right.
rewrite the narrative today. So we'll try and flip the script on that one. But yeah, no, definitely some exciting stuff happened last week, even though it was a extremely condensed trading week with the 4th of July holiday here in the States. So there's a couple things we've been talking about and had well communicated in previous sessions that actually finally came to fruition and happened last week. And really excited to point those out today. So I'll go ahead and hop right into it. So, of course, right here, John, we have our S&P 500 chart pulled up. And we were talking a lot last week and the previous week, before that, a lot about an upcoming buy signal that was, by the time we got into the session last Monday, it was pretty much mathematically guaranteed that it was going to happen at some point last week. And it happened actually the following day. It happened on Tuesday. And it was this buy signal right here where you see our 50-day moving average crossing above that 200-day moving average. That's called a golden cross buy signal. It's really widely tracked on the S&P 500, and you really didn't hear all that much about it really until after it happened on Tuesday. Surprisingly, in financial media, there was very little said about it, despite it typically preceding a significant leg higher in the 11 to 12 months generally to follow in the S&P. So, that was really great to see that buy signal finally actually trigger. It was the trajectory. You could tell, that the 50-day was on a collision course with the 200-day. It was just kind of a matter of when, not if, that crossover and was going to occur. But it was really good to finally see that happen last week. And of course, there were several other things news related last week that kind of broke in favor of stocks, in favor of the markets. Things that, were kind of uncertainties and kind of fell in the favor of the way the markets were predicting that they were going to happen. And, of course, that led the S&P to break out further to set even new all-time highs. We set, I think it was 3 new all-time highs, closing highs in the S&P last week. Of course, on Thursday's session before we closed the half day of trading there for the week, the market actually made a bit of a run close to 6,300 intraday. We end up closing about 62.75, I believe it was, on Thursday. So, had just a really bullish day there. And of course, that's great to see. I mean, all of us as stock market investors, traders, we love to see the market making these new 52-week highs, printing fresh highs day after day. That obviously makes you really, feel really good when you look at your portfolio, right? But with all that said, John, of course, we know as people that have been, market watchers, tracking markets for, a long time, we know, of course, stocks, they can't just go up, day after day on end for forever, right? You do have to get some of these bits of digestion periods to allow for gains to consolidate, have new money come into the markets, when they feel more comfortable. And I think that's actually probably what we're set up more for this week and possibly even next week too. And I think that's what's actually kind of bearing out in the charts here. So let me go ahead and hop into that real quick.
Mm-hmm.
What you see right here is we have our Keltner channels overlaid on our chart right here, and you can see all of last week we spent the entire week with the index trading above the upper Keltner channel band. And, of course, these are a very reliable technical indicator for traders that serve as an overbought, oversold technical. And so when the equity or index, whatever you're looking at, stock, ETF, whatever it is trading above that upper Keltner channel, of course, that's signaling that in the short term, it's likely run a little bit too far too quickly and is likely going to experience a retracement, kind of a reversion to the median, in the relatively short term. You can see various examples of that just over the past year's worth of trading. So if you look throughout that chart there, and that's also being reciprocated down here, that in the short term, the S&P likely did probably get a little overheated last week as we're printing those fresh new highs, had that just massive run up. Because you can see on Thursday, this is a 5-day RSI chart, just to clarify. And you can see where the RSI closed at on Thursday for the week. It was actually it closed above 90. And just to put that into context, traditionally when relative strength is above 70, that's when it's starting to wade into overbought territory. And the further it gets above 70, the more overbought it's getting. And when you start getting readings in the upper 80s, 90s, or above 90, that's signaling that things are getting very stretched, very overextended. That rubber band has really gotten stretched about as far as it can go before it's going to have to, shrink back down to size and kind of revert for a second. So, I think we're seeing, various technical indicators signal that that's where we got last week. And so, the market's kind of in a phase now. I think it's going to be looking just for a catalyst to pull back. I'm not saying, we're in for a, 10% correction or, massive sell-off or anything like that. Just to be clear, I think we're just, probably in for a bit of a pullback, maybe to somewhere around the middle Keltner channel, go back down, test a, where I could see it probably pulling back to is somewhere between where the middle Keltner channel is at roughly 6,100. And you see you have a nice, what previously was a level of resistance is now turned into a floor of support right around 60.50. We had talked about this quite a bit, John, before the market finally did break out to those new highs. So we do have a, pretty significant, level or really several levels of support under the market. Now, of course, you look back to the highs that were set back in February too, again, right around 6,100. So somewhere in that level, we might be in for a pullback down to roughly there, before ultimately, I think, resuming this current bullish trend higher. But, I think that's kind of what the charts are telling us right now. But all that to say, the trend underlying the markets is still really strong. We have, great, nice series of higher highs and higher lows. Some, bigger, really important technicals are really all starting to align in the charts. Just set new 52-week highs. There's a lot of nice tailwinds looking at the medium to long term for the market that are really nice. And I did want to go ahead and hop into just a couple of those here next before I talk about the trade that I spotted for today, John. But I think you said, go ahead.
I was just saying, perfect. That's what I know everybody gets really excited about that. The ratio charts you've been doing have been huge, very helpful. But we'll keep everybody hanging on to see that trade because you've been on fire in the last couple.
Yeah, for sure. I promise we'll definitely get there, but just a couple quick things. And so these aren't exactly ratio charts right here. What these are, this is just a graph representing just the percentage of S&P 500 stocks that are trading above a specific moving average. So I have two of these charts. The first one we're looking at right here, this is specifically S&P stocks that are trading above their 50-day moving average. So what I'm going to talk about with these charts right here is just that over the past couple of weeks, we have seen a continuation of a nice broadening trend happen across the markets. The market leaders, those sectors, those industries, they're continuing to really outperform. So we're not seeing a great outperformance in, say, the equal weighted S&P relative to the market cap weighted S&P. We're not quite seeing that. Those really high, really heavy market cap weighted stocks that have really been the market leaders, they're still outperforming and have been over the past couple of weeks. But you're starting to see that, kind of the bottom, you're starting to go down through the rest of, some people refer to it as the 493, right? The rest of the S&P 500 outside of the Mag 7. You're starting to see a lot of those names really start to, kind of have a rising tide lift all boats, right? So that's what's showing up in this chart right here, because this is again, look at the S&P 500 stocks trading above their 50-day moving average, signaling that they're in a shorter term uptrend. So you can see right now, this is just a percentage over here. That's what's really important, is just seeing where this the data currently is on this percentage. And so you can see last week we actually topped out at above 80% of S&P 500 stocks trading above their 50-day moving average, which is significantly bullish.
Mhm.
That's that's over 80% of the S&P 500 is in a short to medium term uptrend. So that's a very, very good sign. That's a very definitive signal of broad-based strength, at least in the shorter term. And you can see we're still hanging in there now. We're right at about 75%. So about 3/4 of the index is still in a nice uptrend. So that's really good to see. And we're starting to see that now transfer into long-term uptrends as well. So you can see, of course, we're a little bit off of the highs in this chart from last week, but this is looking same type of chart, but instead of the 50-day, this is looking at the 200-day. So we're stretching this out, looking at a longer term moving average, right? And so, of course, you can see this line has been sloping up over the past couple months, coming off those April lows in the market. But again, you can see we had a nice ramp up in this chart last week and actually got to about 65% of S&P 500 stocks now trading above their 200-day moving average, signaling that they are continuing this nice broadening out. We're seeing nice relative strength, in different pockets of the market that are starting to, really perform, catch up, with what the index and what the market leaders are doing. And so this is a really great sign. This is a good sign of a healthy bull market. You have your market leaders lead you out of the bottom. They really, catch the index, start pulling things higher. And then you start to have the kind of the laggards start catching up, right? And it's good to see the market leaders are still performing quite well while these other ones are starting to catch up too. So again, kind of like I said earlier, we're starting to have a bit of a rising tide, start to lift more and more boats, which is a really great thing. And so with that, it's kind of going to lead me into the trade that I brought today, John.
Mhm.
Keeping in mind the context of what I was saying earlier, you're seeing this nice broadening out across the markets. You have a really great long-term trend in place for the S&P and for the market. But keeping in mind that a lot of the really hot sectors and industries, some of the market leaders we've talked a lot about in recent weeks, they've kind of gotten into a little bit frothy territory. So, a little
Mhm.
bit hesitant on a week like this on some of those. But that's what brought me to this setup right here, because this stock has been performing quite well, John. This is Raytheon Technologies, of course, a major defense contractor. People are probably very well familiar with Raytheon, RTX. While they have been performing quite well, they're not the AI core trade. They're not the really buzzy tech names, the hyperscaler stocks. Big financials, ones like that have really, really been outperforming. That kind of towards late last week, really got into that really overbought frothy territory. Not quite so much with this one. We still have a great trend here. Really nice series of higher highs and higher lows. Great technical buy signal going on here, looking in the shorter term. So we have our 21-day EMA trading above our 63-day EMA, which is our green line down here. Starting to see that gap widen out. So signaling a strengthening buy signal there. And then, of course, for RTX, we can see it's currently trading within its upper Kelvin channel band. It's just a touch below 146 per share. So at current prices, it's signaling that despite the great bullish uptrend, very constructive trend that it has in this chart, it's not currently trading in overbought territory. So that is signaling to me that this is a pretty attractive trade entry point for RTX. So that's how I landed on this trade for today. And I think that this uptrend probably has some legs. I really like what I'm seeing in the chart here. So I actually went and found a directional call option purchase play for this one. And I kind of honed in on this one right here. This is the August 1st, 136 strike call. And I think it was right around this price when I looked earlier. I don't believe it's moved too much. So looking at this 136 strike call, and so yeah, it's pretty close right here. So I went ahead and plugged it into the call option purchase calculator tool that we have. And you can see it has some pretty great leverage provided by this call option. You can kind of look through some of the trade analysis down here below. Of course, it meets our 1% rule if you're following the traditional power trend method right there. So you can see it does meet the 1% rule if you're looking to have this call option profit if it is up by 1% come option expiration. So really like to see that right off the bat. And then as you kind of move right and progress across this this table down here, see some really nice profit potentials. You can see if Raytheon were to increase by 3.5% come option expiration, You have a 33.3% return here. And then if you look all the way here to the far right of this chart, you see if Raytheon makes a really substantial move higher and is trading, 10% up come option expiration, really nice profit potential there of, it would be standing to benefit or standing to profit by 115% there. So really attractive looking trade opportunity there for Raytheon. So wanted to make sure to share that one this morning.
Yeah, no, that's great to get both the little bit of caution there that a lot of this stuff is kind of frothy. You see the total market up above that top Keltner channel, and you're starting to see it today. We're watching the market right now. It's taking a little bit of a breath. It's reeling back. It doesn't mean every stock is though, and there are some out there. If you know where to look, as you clearly do, uh, you can find those great trades. It's a heck of a lot easier having somebody kind of just put it in your lap like this. So very grateful for that, Blaine. This looks like a pretty good one, man. I am looking forward to watching it play out.
Yeah, absolutely. Well, I appreciate it, and exactly right. It's you try to assess kind of top down market conditions, how things are. When the market conditions are really favorable, maybe sometimes that is a better time to focus on some of those market leaders that have really been pulling things higher. But again, when they get into that kind of really overheated, really overstretched positioning, it's a little. I prefer to exercise a little bit more caution when I see that and look for more opportunities like this that are still really great looking setups, great stock, really good trading opportunity. So that's how I landed on that one. And yeah, we can revisit it come later, this week or next week and see how it turns out.
Absolutely. Yeah, and I will definitely be jumping on. And this is awesome. And again, just reminding everybody that you guys are doing the trade of the day live on Tuesdays and Thursdays. Pretty amazing stuff there. They've been really exciting. You had some really great sessions, dove into some amazing, again, it's more opportunities. This is like handing it right to you guys. So you got to jump in on these sessions. Keep an eye out for the replays if you're tied up or something. But it's some great stuff from really good contact good concepts in as well as actionable trades. So you're getting the tips, you're getting the advice, getting the education, and you're getting the trades. And they've been producing. We've been following the stuff that you're doing, and it's been helpful. I hope that everybody's had the opportunity to take advantage of it because that's what this is all about.
Yeah, I appreciate that, John. Yeah, we'll be hosting our next TOD live tomorrow. So yeah, we can definitely push that registration link out today. If you're following in the Telegram channel, things like that, I'll definitely make sure to get that out there. But yeah, they've been great sessions, been sharing a lot of really good info. Helene's been joining me on those too, and each of us bringing some really exciting trade ideas, kind of what we're seeing in the markets. So yeah, they've been great sessions, and love having folks attend them. So. Maybe we'll have you hop in
Awesome.
there, be a guest speaker one day, John.
Oh man, I'm all over it. I would love to be in there. I'd love to chat with you guys and hear what Helene's thinking too. I mean, she comes up with some amazing stuff that I just wouldn't have thought of in a million years. So love the extra brain power, that's for sure.
Yep, absolutely. Well, that's about everything I have for today. So, just watch the markets this week, folks. Not a lot of events on the calendar per se. So it feels kind of like John. This might be one of those weeks where we're kind of beholden to the headlines and whatever's getting reported. Every 30 minutes. Because
Mhm.
we're kind of in a vacuum of significant market events, kind of pigeonholed between earnings and some other stuff. So. Could be a bit of a choppy week given the overbought conditions, but we'll see how things play out.
Yeah, absolutely. Well, we're going to keep an eye on it. Blaine, thank you again. Thanks everybody. And we'll put some links in the email to the TOD Live, to some other stuff that Blaine has been generous to make available to everybody. So check out the email when you see this, and you'll see all the links you need to get access to that stuff. Blaine, we'll be talking to you in a couple days, my man.
Sounds good, John. Appreciate you having me here this morning. Glad to be here.
Take care.
All right, take care, everybody. See ya.